using a management service organization produces the advantage of cash that did not exist because you can defer what would have been federal income tax paid at the personal level into the business, and then that cash can be used to solve those three problems that I just mentioned.
Life Matters, a Penn Mutual podcast for financial professionals, bringing you life insurance insights from advanced sales experts and life insurance specialists. Grow a stronger practice today.
Welcome to another episode of Life Matters at Penn Mutual Podcast. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. Now, we are deep in fall here at this point. It's late October. We've had football season now for a couple of months. Basketball season has just tipped off. In fact, I'm representing the Lakers with my polo here today. For those of you that aren't watching on our YouTube channel, World Series is going on here. So lots of great sports, but it's also my favorite time of the year because it is tax planning season. A lot of business owners right now are working with their accountants to determine where they're going to project from a revenue perspective and where they're going to project from a tax perspective as well here. And in some cases, those business owners are looking for opportunities/options that may potentially mitigate some of those taxes that they are projecting here. And there are some options out there, and one of those is potentially a management services organization, aka a MSO. So we invited Alex Jones, who's the founder of Guardian Tax Consultants, onto the show here today to talk all about MSOs. It's a great conversation. We talk about MSOs, we talk about taxes, we talk about the city of Nashville. If you haven't heard Alex speak before, he's a great presenter. He's somebody that is a wealth of information. I really think that you'll find this interview both enlightening and entertaining. But before we get to that, I do have an announcement that I get to make here on the show. So speaking of fall, this fall, we're not just carving pumpkins. We're carving outdated habits like paper and fax at Penn Mutual. We know all of our listeners are ahead of the curve, and it's time to ditch the paper trail. Encourage your clients to go paperless today for all their Penn Mutual documents. It's faster, it's more secure, it's better for the planet, and I can attest it's really easy to do. Just have them go to www.pennmutual.com/go paperless to set it up, or they can log into the client portal to make the switch and leave paper in the past. So with that, let's get to the interview that I did with Alex, and I'll be on to wrap up the show afterwards. Well, Alex, thank you so much for joining us here on this episode of Life Matters, a Penn Mutual podcast. It is a true honor to have you here today.
Bill, I appreciate the invite. Watch your podcast. You've had a lot of great, interesting appearances, and I'm honored to be one of those.
Now, I know a lot of our listeners/viewers will know who you are, but not everybody does. So why don't you do a little introduction, tell everybody a little bit about yourself and your firm.
Sure. So name's Alex Jones. We're located in Nashville, Tennessee. I'm a co-founder of a firm called Guardian Tax Consultants. And our firm works with family offices, insurance producers, and advisors to help their end client, privately held business owners, defer tax as cash back to the business to help grow the enterprise.
All right. So I actually wanted to hone in a little bit on that here. So as you said, name of your firm is Guardian Tax Consultants. What does that really mean? Does it mean that you incorporate kind of comprehensive tax planning in the lens of potential life insurance opportunities? Is it really that you focus on tax planning first and then kind of opportunities arise as you're doing that? What is your process? Kind of what does the firm do if somebody comes to you and says, hey, I've got a tax problem and we're really looking for solutions here?
That's a great question, Bill. Our firm has a deep subject matter expertise around a strategy called a management service organization. So the business owners that come to us typically have three specific problems. One, they're losing cash to taxes. Two, they may have continuity risks within the business that could leave the value at chance. And then three, their transition out of that business may not be in a way that maximizes the value, or it may not happen at all because it's not properly planned for. So the tax consulting we do is aligned around those three problems, and using a management service organization produces the advantage of cash that did not exist because you can defer what would have been federal income tax paid at the personal level into the business, and then that cash can be used to solve those three problems that I just mentioned.
All right, great. We're going to dive into MSOs in just a second here, but I did have one last question kind of as the setup here today. So I've known you for a long time, but not everybody on here is familiar with you as we set up right at the beginning. I was looking at your LinkedIn profile and it said something interesting at the end of the introduction. It says you're an enrolled agent IRS. And so what does that mean? And what do you tell people when they bring that up?
So most often people think that I actually work for the IRS, and that's not what an enrolled agent is at all. It's actually a licensure that the Department of Treasury issues to individuals to represent clients on behalf of IRS. So if there were an audit, I would have privilege to represent them on an unlimited fax for a stance before the IRS. So think of a CPA or a tax attorney. They typically have that by the fact of their accreditation. If you're not one of those classes, you have to be licensed by the Treasury Department to be able to have representation rights for clients to the IRS. And it's a rigorous process. They do a suitability background, pull all your tax transcripts for prior years. You have to test on 3 specific tests, very deep, a lot of accountancy, forensic type of mapping on forms. So it was a challenging test, but it was worthwhile to understand the system of taxation and, quite frankly, what CPAs, CFOs, and the accountants go through on a daily basis.
So you're not putting on a gray suit and grabbing a briefcase and going around and auditing people. Your job is really just to help people if an audit does come up. And that's what that enrolled agent designation does.
You know, Bill, you would not want to call me if there was an audit, just because that's not what I do full time. The enrollment is phenomenal in the sense that understanding how the IRS works, how audits work, how criminal referrals work, right? How to protect our clients from that aspect is really why I took that test. I wanted that deep knowledge so that we could prepare our clients if there ever was an audit, that they're always ready.
All right, terrific. That was a great answer. I really appreciated that because frankly, I didn't know what it meant either. So it was educational for me. All right, let's dive into MSOs a little bit here. First question, simple question. What is it?
What is an MSO? So an MSO is a new entity that you open up. It's like another company within your enterprise. And that new entity has the sole purpose of providing administrative support and services back to your operating company. That's it. Now, because you own both companies and because you're actually performing services, it allows your firm to be able to deduct money as a management fee in an operating company, and it become taxable income to the management entity. So that's a unique characteristic when you own both companies in a control group. And that's where really the tool has a lot of uses because of that characteristic.
If I wanted to just summarize what you said, basically, if I own a company or several companies and I wanted to kind of consolidate the management of those individual companies, I might establish an MSO basically to provide that function for me. And so, and then what my operating companies pay to that MSO are potentially deductible to my operating companies. It's taxable then to the MSO. So it's not like you're avoiding taxes necessarily. It's just that you're providing services through another organization. You have a deduction on one part, you have a tax on another part. However, I think that one of the primary benefits that we see in a lot of those circumstances is the MSO is generally taxed as a C corporation. Do I have that correct?
That is correct, Bill. And beyond the deductibility of revenue, the other main benefit of a MSO is it protects assets. That's why they were originally created. So imagine an entrepreneur that has 3 or 4 operating entities, right? He may have risk, what we would call commingling risk, resources that across those 4 entities might not be paid properly, might not be documented to the amount of time per company. And so it simplifies his ability to manage the operations of those 4 companies by paying all the administrative aspects, labor included, out of one entity.
Yeah, that's certainly a huge benefit. And I know a lot of business owners are always concerned about creditor protection. So this might be something that provides some benefit to them in many circumstances. I did want to go back to the taxes because I wanted to make absolutely clear kind of why I say that might be a benefit. And correct me if I'm wrong here. But if I'm an S corporation owner and basically everything flows to me through to me, and I'm in the top marginal tax bracket, so I'm paying 37% federal in addition to all the other taxes that I pay, and then I make a payment to an MSO, which is potentially deductible to my company. The MSO is taxed at 21%, being a C corporation. So that is probably something that appeals to a lot of business owners, is that you potentially get a deduction at 37%, have to pick up tax at 21% at the MSO level. And so there's potentially a little leveraging there. Now, obviously, we don't provide tax or legal advice. It's always up to the client's tax and legal advisor to make that determination. But is that leveraging one of the things that drives a lot of these MSOs for the right client?
I think so, because that leveraging creates cash back to the business, and cash is the lifeblood of a business. And to kind of talk a little deeper on that tax delta that you mentioned, there are various types of pass-through entities, but all of them have one common, I would say, challenge when you have a business owner that wants to grow their enterprise value. It's that regardless if money's left in the business or they consume it, it's taxed. And it could be taxed at the highest 37% rate. In some of our states that have aggressive state taxes, it could be 45 to 50% of total tax. And you think about that amount of cash that has to leave the business, it can be quite substantial. So when we move funds from the pass-through entity into the management entity, we do have a lower corporate rate, 21% tax. And profits remain there until the shareholder decides what they want to do with them in the C corporation, whether it's used for the company, whether they want to use it as a wage, as a W-2, or issue it as a dividend.
All right, terrific. What type of industries do you generally see as a good fit for MSOs? Is there one industry that lends itself to being a better candidate for an MSO than something else?
I would say that independent physicians, where they have less than maybe 4 owners, is a very good spot to look. The reason is MSOs were created in the medical space in the 1960s. So there's a lot of familiarity with the strategy. Number two, physicians themselves, they do not get QBID or 199A, so they are paying the top rates. They need asset protection because they have malpractice insurance risks. And then when they typically monetize an exit, an MSO is involved with private equity if there's going to be a roll-up or a buyout. So you take those fundamental benefits, and we see a lot of adoption there. The second location would really be attorneys, injury firms that have several partners, maybe no more than 4, because once again, their stated business, they don't get QBI, and they normally get large settlements, very lumpy. They may get 2 years of profit in 1 year, and they want to defer tax, leave cash so that they can use that to get to the next case, because it's expensive when you're going to court and paying for expert witnesses. So those are 2 that we've done quite a bit of work around specifically.
Yeah, I've also been involved in some cases with real estate companies, real estate developers, where they have a number of different projects or companies, and they want to centralize their management services. I've also seen it in restaurant groups, like if somebody owns 6, 7, 8 different restaurants. Have you seen those other opportunities as well? It's interesting to hear kind of those personal services corporations, but we've seen some other opportunities there as well.
Yes, there was actually a client that was brought to us that owned several McDonald's franchises. And come to find out, speaking to the accounting firm, there are a lot of franchisees for McDonald's, Burger Kings, that once they own a certain number of stores, they're actually asked to set up a management structure so that the franchise ownership can be controlled, the isolation of and protection of assets, and how what they would call SG&A, sales and general administrations, are run throughout the totality of the franchise owners' multiple locations. So we see that a lot in that area. As far as restaurants, just non-franchised model, yes. I mean, if you think about the liability that you have alone, MSOs are great to help protect those assets and economies of scale in structuring everything from paying the suppliers, all the different things that require a restaurant to have scalability and quality control.
How many entities does somebody have to consider an MSO? Like, would you consider an MSO for somebody that owned a single entity, or would you consider it only if they own multiple entities?
It can be a single entity or multiple entity. What's more important is what's the goal of the client and the challenges that they're trying to use the tool to overcome. And within that, they need to have a high enough income, high enough profit. So I would say an individual owner, they need to be making at least $3 million a year to really get value out of this tool. So if I were to give you a sweet spot, I would say 5 to 15 million of net profit is really where the business enterprise needs to be. And those lend very well to this tool. And think of this tool as a hub, right? The MSO is really the main tool to where we see ancillary strategies tacked on, whether it's insurance or cash balance or cost segregation, all the other tax strategies that help reduce the total liability for the client personally. This is one of the corporate level planning strategies that we put in place first.
Some of our listeners might be thinking to themselves, well, I've got a client that might be a good fit for this. They have some risk. They might be interested in the tax leveraging. They are in that kind of income range that you just mentioned. If somebody is interested in that, what's the process like in regards to setting up an MSO, and what is the time horizon that is necessary to do so?
We're actually coming into what I would call our busy season. It's the 90 days before the end of the year where businesses are looking at their revenue and cash flow, and they're trying to decide, do we buy an asset? Do we do tax planning? So it's a very pertinent question. Our process is one to where when an advisor brings us their client, first off, we protect that relationship, right? We want to ensure that the advisor is the lead planner on that case, and we are working as a subset, almost like a subcontractor to him for the MSO. So he would bring the client, we would have a conversation together where we would ask questions to the client to try to determine, is this suitable? Does this help the client? If the answer is yes, then we would move on to a feasibility study. A feasibility study is really where what makes you audit ready. It is a report that determines the amount of money that can be moved between entities that would be respected as normal, necessary, and arm's length. It also determines what that owner would do with that cash that is now created and could involve life insurance, could involve other process or planning strategies. And then lastly, it's going to also put in there some of the meeting minutes and strategic things that are needed just so that when it moves to establishing the MSO, all of the advisors have alignment on what they're going to do, and it's very clean. So that takes about 3 to 4 weeks. And then the setting up of the management entity generally takes a week or two, right? It's establishing it, making sure the management agreements are created and drafted. And while I'm simplifying a lot of the sub steps, we want to have it done by the right corporate attorneys, the right reasonable compensation companies, the right tax attorneys, because we want the foundation done correctly. And if we do it right and we service it every year, then if there's an audit, we're always ready and we're not that concerned. If we don't do it right and we just move money and open up a C corp, and that's a significant risk.
I think I heard a couple of things there. One is obviously you want to make sure to do things right and not hurry through just in order to get something done before the end of the year. But This podcast will be released in late October. So, roughly probably about 70 days before the end of the year. If somebody has a candidate and they're a good candidate and they're ready to go basically by late October, there is a possibility that one of these could be established before the end of 2025. Is that correct?
Certainly, we would want to get started as quickly as possible. Normally, the end of November is our cutoff for new clients. And it's just because we can't do it with quality within 30 days, and we're not going to jeopardize the client, and we're not going to jeopardize our own relationship and quality control.
You mentioned life insurance there. Obviously, I work for a life insurance company. Where does life insurance fit here? Is it in the MSO? Is it part of the MSO? Are you using the MSO to fund it? Obviously, life insurance is probably not a fit in every single case, but where do you generally utilize life insurance in those situations?
So, of the 75 companies we've worked with, 80% have utilized insurance in some form for either risk transfer, wealth accumulation, or wealth preservation. And so the understanding of the client's goals, the enterprise goals, the challenges is going to determine where we look. And the MSO really is providing the budget because it's cash that never existed. If we structure it correctly throughout our process, by the time we open up the MSO, the need for insurance is already identified. The budget for that is already identified. And so it can be a very seamless process. Now, what type of insurances do we see? It's all over the board. I'll see in an estate or wealth preservation, we'll typically have a large death benefit permanent policy that's a split dollar, could be owned by a slat, could be owned by an islet. And the MSO will pay the premium, but it won't own the policy because we don't want a step transaction. We don't want a transfer for value issue down the road. We might see that the company wants to retain and reward its employees. And so we'll have a deferred compensation plan. Well, that will likely be owned directly by the C corporation as a COLI owned type of product. And then we'll see where the MSO might have like a 162 type bonus arrangement. In that case, the insured might be an employee and the MSO might have a collateral assignment back based upon how they've structured that. So just like any life insurance can be set up, the MSO or the C corporation functions as a operating entity, just like you would structure anything else. We just now have the advantage on average of probably $500,000 or more of cash every year that never existed. And that is a powerful planning tool when you have a tax deferred asset class that could be accessed tax free if done properly.
You just gave basically my favorite answer to every question. It depends. It depends on the client's needs. It depends on what they want. But bottom line is that there are a lot of opportunities within this MSO structure, depending on what it is that the client needs. And so I think that that's the biggest takeaway there. Speaking of life insurance, I would love you to kind of share a little bit about what you like working with Penn Mutual. I know it's a relatively new relationship for you at Guardian. We've been working on a few things. I know that when I first started with Penn Mutual, one of my first meetings was with your partner, Mike, in Nashville. And I was really excited to get a chance to meet with him at that point here. But what are some of the things that you like about working with Penn Mutual?
A couple things really stick out to me, Bill. Number one, Penn Mutual's products, especially in the IUL space, the whole life space, you all never really reduced cap rates. Your dividend didn't really change. So from a standpoint of continuity of when we know we use a type of insurance policy, that the contract itself and what is going to be changed, you set a precedent for us so we have confidence. That's number one. There are some carriers that have, they put teaser rates out. And then as soon as you jump in a product, a cap or a dividend changes, and all of a sudden, all of your analysis is completely off. The second is the level of service, I think, is par to none. The accessibility of not only the underwriters, but also the team that can help make decisions or exceptions or help get a case that might be adverse health to a standard table or something that's going to help get the client a better cost for that policy. You all are willing to listen and you act very quickly. So those two things really set you apart. Being a mutual company and having a history of setting precedent that when we look back, we're very, very comfortable with using you going forward.
Yeah, we like to say you'll never be embarrassed by selling a Penn Mutual product. And I think that that served a lot of financial professionals well.
Your products are very clean. They're structured, they're easy to understand, and that's not always what I see across the industry. Straight S&P, here's your cap, here's your floor, easy to follow.
So we like to end these podcasts with a couple of fun non-business related questions. And I have a couple of questions written for you here that are specific to where you live. So you live in the Nashville area. I travel a lot. I think I've visited every major city in the country multiple times over the last 20 years plus. And I'd say that the two cities that have probably changed the most in those 20 years are Austin, Texas, and where you are, Nashville. Just explosive growth there, a very different city than it was even 20 years ago. What are some of the upsides and downsides of living in an area that is changing so rapidly over the last couple of decades?
The upside is you could access every type of amenity, shops. There's lots of things to do, right? I mean, you don't have to go to Atlanta. You don't have to go to any other big city. We have just about everything you could want. The downside to that is it comes with congestion, it comes with traffic. And for some reason, we have become the bridal party capital of the United States. So if you go to downtown Broadway, you're going to find a numerous amounts of bridal party, bachelor parties every single weekend. You just have to witness it. My wife and I will have some date nights just to go down and sit and watch people because it's that entertaining.
Yeah, and it's not just weekends, it's weekdays as well. I've been on Broadway on a Wednesday night and seen a bridal party on one of those bikes that acts as a bar as well, going up and down Broadway. It is quite the sight to see. I'm not sure if that's an upside or a downside, but it's definitely an interesting event to witness.
We've got pedal taverns, is what they call that. We've got tractors pulling these big old carriage type things with hay in them. I mean, you just got party buses galore. So if you come to Nashville, be ready to party because that's what everybody's doing.
Yeah, well, speaking of partying, my next question is kind of related to that. So, if somebody was to come to you, Alex Jones, and say, "I'm going to be in Nashville for one night. I'm never going to come back again, but I'm going to be there for one night, and I want to do the thing that's the most authentic and most fun thing to do in Nashville," what would your suggestion be?
Well, that's a tough question. If you're going to come to Nashville, it's known for its music, so you would probably want to visit the Ryman Auditorium, which is very, very famous. It's downtown. It's where a lot of the country music stars first started before they became stars. And then you probably want to go out to the Grand Ole Opry, visit Opry Mills, the Gaylord out in that direction. Those are the two iconic types of establishments I would think of Nashville. And then there's so many places to eat, right? We've got great barbecue. But I think if you did those two things and you were here for one day, then you could say I've checked Nashville on the list.
All right, well, good. I've done all those things, and so I think that I could say that I've had the authentic Nashville experience. In fact, I did see a show at the Ryman once. I saw the band Shinedown there, which is not a country band, and there was a lot of
No.
reverberation of the sound in there. It's an old metal building and not really built for rock music, but it was cool to be there just to experience it. It's definitely different than any other venue that I've been at for a concert out of the hundreds that I've been to during my lifetime. So that was a lot of fun. All right, Alex, if somebody is interested in an MSO or learning a little bit more about your firm, where's the best place for them to go?
So the best place for them to go is directly to our website, guardiantaxconsultants.com. That, or they can contact me or one of our relationship managers, such as Jake himself. And I don't know, Bill, if you're going to have contact information below on from the podcast, but come to us directly. And then we also have CPE for CPAs. We're registered with NASBA. So we go out and teach accounting firms this strategy and how it works with insurance and business planning and exiting of the business. So we get a lot of invites to go and speak to that. But yeah, just directly to the website or call us, and we'll get back to you very, very quickly.
All right. And what was the website address again?
So it is guardiantaxconsultants.com. That's consultants with an S.com.
All right. guardiantaxconsultants.com. Even I can remember that one. So easy to remember there. And for our listeners, that if you have questions in regards to MSOs or would like a warm introduction to Alex or their firm, you're certainly welcome to reach out to me or the advanced sales team or your Penn Mutual representative. So with that, I think we're going to wrap it here, Alex. Thank you so much for joining us here today. Great conversation. I certainly learned something about MSOs. I hope our listeners did as well. So thanks again for joining us here today.
Thank you, Bill.
All right. Thanks a lot to Alex. Certainly a great interview. I learned a lot about MSOs that I didn't know in the past. I didn't know that they were first established for doctors. I didn't really know that doctors were a great candidate for an MSO. So even I continue to learn things. Alex is a great guy, somebody that I've known for a long time, and I really enjoyed the conversation. I hope you did too. If you have a question for me or for Alex or anybody else associated with the show, drop me an email at lifematters@pennmutual.com. Again, that's lifematters@pennmutual.com. That's a special mailbox that only I have access to, and I do respond to every email that is sent there. That's not junk mail. Again, one more time, that is lifematters@pennmutual.com. If you have not subscribed to our YouTube channel or visited it or watched any of the content there, you have no excuses at this point. I have talked about it on this podcast. I talk about it all over the country. It is a great channel. We have so much content there. There's this show. There's other shows that I'm part of. We have a whole bunch of content now on the refreshed ACE. So if you haven't checked that out, I would encourage you to do so. Just go to youtube.com, type in Penn Mutual in the search box. The channel will pop up while you're there. Smash that subscribe button. Watch some of the content, like the videos. I promise you won't be disappointed. Speaking of subscribing, if you haven't subscribed to the show on Apple Podcast or Spotify or whatever it may be that you listen to podcasts on, do so today so you don't miss any future episodes of the show. And finally, if you are a subscriber on Apple Podcasts, if you can stop by Apple Podcasts and leave us a review, I would really appreciate it. It helps to boost visibility of the show in the Apple Podcast ecosystem. 5-star reviews only take a second. If you have a couple of additional seconds to write a written review, I'll be your best friend. So for Alex Jones, I'm Bill Bell. Thank you so much for joining us here today, and I look forward to talking to you again soon.
Thank you for watching. If you enjoyed this video, don't forget to hit that subscribe button and turn on notifications so you never miss an update.